I want to start with something uncomfortable. Most Americans don't actually understand insurance. They think they do. They have a policy and they pay a premium and they assume they're covered. But what they really have is paperwork, not protection. And I don't say that to scare you. I say it because I've seen how this plays out when life actually happens. I've worked with insurance systems at scale. I lived in different countries in the US, in Asia, Singapore, Hong Kong, Vietnam, Thailand. I've seen how other parts of the world approach financial protection. And coming back to the US, what shocked me wasn't that people don't care about insurance, it's that nobody ever explains it in plain language. So today, I want to simplify this. No jargons, no scare tactics, just reality. So let's start with the biggest misunderstanding. Most people think insurance is something you buy once and forget. That's wrong. Insurance is not a product, it's a strategy. It's supposed to be a financial shock absorber. It exists for one reason only, so your family doesn't collapse financially when something unexpected happens. That's it. Not to make companies rich, not to check a box, not to feel responsible, to absorb shock. But here is the problem. Most policies people have don't actually do that. They look good on paper, they feel responsible, but when you zoom out, they're full of gaps. Let me give you a common example. Term life insurance. Almost everyone starts with term. It's cheap, it's easy, it feels smart. You get a big coverage number for a small monthly payment, 200,000, 500,000, a million. It feels comforting. But here's what most people don't realize. Term life expires, usually right when you still need it. People buy a 20-year term policy in their 30s. They think, by the time this ends, I'll be fine. But let's do the math. If you're 35 and buy a 20-year term, that policy ends when you're 55. At 55, your kids might still be in college, you might still have a mortgage, you might still be supporting parents, you might not be fully retired, and suddenly your coverage disappears. Or worse, it becomes insanely expensive. So now you're older, your health isn't perfect, and you're forced to reapply. That's when people get declined or they get paid higher rates or get priced out. Nobody tells you this part when you sign the original policy. They just show you the monthly number. This is why I say most Americans don't actually have protection. They have temporary coverage. Another big misunderstanding, people think life insurance is only about death. It's not. It's about income. If your income stopped tomorrow, what happens? Could your household run for 6 months, a year, 2 years? Most families are one medical event away from financial chaos, not because they're irresponsible, but because nobody built a system. Life insurance isn't about dying, it's about protecting your income while you're alive and your family if you're not. Now, let's talk about premiums. People obsess over monthly cost. They argue over $20, they shop 10 companies, they delay decisions for weeks, but they never ask the real question. What is this policy supposed to accomplish? Let me give you an example. If you pay $20,000 over 20 years and your family receives $1 million dollars if something happens, that's not an expense, that's leverage. That's turning 20,000 into 1 million. But people don't think that way. They think I'm spending money. No, you're transferring risk. You're buying time, you're buying options for the people you love. Another thing nobody explains, insurance is not about maximizing returns, it's about minimizing damage. You don't buy fire insurance hoping your house burns down. You buy it so that you don't lose everything if it does. Same logic. Now, let's talk about something uncomfortable. Most people are underinsured. They pick a number that feels big, but they don't calculate replacement income. They don't factor childcare, they don't factor healthcare, they don't factor inflation, they don't factor how it actually takes to emotionally recover from loss. They just pick a round number, and that's how families end up struggling even after receiving a payout. Here's a simple framework. Take your annual income, multiply it by 10. That's a starting point, not a perfect number, a starting point. Then ask, how long would my family need financial breathing room? 1 year, 5 years, 10? That's how you think about coverage, not what's the cheapest policy. Another thing Americans don't realize is your employer benefits are not enough. Group life insurance is usually 1 or 2 times your salary. That barely covers funeral costs in some cities in the US, and it disappears when you change jobs. So people think they're covered until they're not. So let's talk about permanent policies. There's whole life, universal life, indexed policies, and so forth. And people either completely avoid these or they buy them without understanding them. So permanent insurance isn't evil, it's just misused. It's not for everyone, but when structured correctly, it can act as a lifetime coverage, forced savings, tax advantaged asset. When structured incorrectly, it becomes an expensive mistake. The problem is nobody explains the difference. They sell, they don't educate. That's what I'm trying to change. Because here's the truth: good insurance planning is boring. It's math, it's timelines, it's risk management, it's not emotional. But bad planning is devastating. I'm rebuilding my life right now in a new city, and I'm starting over financially. And this is exactly why I care about this. I see how fragile things really are. One accident, one diagnosis, one layoff, everything changes. Insurance doesn't prevent pain, but it prevents financial collapse. And that matters. So if you take nothing else from this video, remember this: insurance is not about policies, it's about continuity. Can your family continue if you can't? That's the question. Not the price, not the brand, not the buzzwords. Continuity. Here's what I recommend for anyone watching. First, review what you already have, not just coverage amounts. Look at expiration dates. Look at the beneficiaries. Look at whether it follows you if you leave your job. Second, understand what problem each policy solves: income replacement, mortgage protection, final expenses, legacy. Every policy should have a job. If it doesn't, question it. Third, stop avoiding the conversation. Most people delay insurance because it feels uncomfortable, but discomfort now is cheaper than crisis later. So finally, get a second set of eyes, not someone trying to upsell you, someone who will actually explain your options. So I offer simple 10-minute coverage checks, no pressure, no obligation, just clarity. So if you want that, the link is below in the description. And this channel exists to simplify insurance, to remove fear, to replace confusion with understanding. So if this helped you, please, I request that you subscribe, because I'm going to be posting regularly about real topics, real numbers, and real education. And I hope to see you in the next one.